Okay, good afternoon, everyone. Welcome to the third session of the Finance Club. So, based on the feedback we received from you people, and uh, uh, based on what topics you guys would like to learn, because one of the most important objectives of the club, as I've iterated before, is doing what people want. So this time we wanted to cater to what the majority wanted, and most of them were interested in mutual funds. Cryptocurrency is another topic, but we felt that mutual funds is something which is in line with the club and got more requests as well. So from today, I'm happy to tell you that we'll be starting a mutual fund session today. Today will just be like an intro into mutual funds, and we'll kick off things from here. So again, as I've iterated before, and I'll keep reiterating it again, mutual funds, at least the topics from now, because the first two sessions which we conducted in the club were basics. It was kind of like a refresher course, which more or less people did have an idea about, but needed strengthening in those areas. So the subsequent sessions from now are gonna ramp up a little bit. So it won't be on the same plateau. So it'll be an exponential curve. The difficulty, the concepts are gonna increase. So the best way to stay connected and get a grasp of everything is interaction. You need to stimulate your brain. You guys need to think. So when you guys think, when you guys have an idea about something, and then if I introduce some concepts, so it'll get reinforced better. So I would really appreciate it if you guys make this session as interactive as possible, please. And by interactive, not the chat box, please. I'm not vehement against the chat box, but I personally feel like I would really much prefer it if you guys open up and speak. So let's start things off. So can anyone just unmute and tell me, what do you think mutual funds are? Anyone? Please guys, unmute. I can't go back to. Yeah. So one by one, let the guy go first, and the lady can go later. So yeah, both of you are audible. Okay. Oh, okay. Excellent. Okay. Okay. That's one way to put through. Excellent answer. So, lady, you can please, you can, yeah, sure. Okay. Okay. Yes. Excellent. That's one way to put through. Excellent answer. Anyone else, guys? Anyone else? Please, I want you to open up. The first 10 minutes are the floor is yours. The floor is yours. I want to hear as much as. Yeah. I think. Yeah. Okay. Okay. Yes, excellent. Yeah, that's one way to put through. Very good answer. Anyone else, guys? The first 10. Yeah, continue, please. Yes, yeah, that's one way to put through. I'm liking the answers which are coming, guys. Great going. So the first 10 minutes, the floor is yours. I want to get as much as interaction as possible. I want your brains to get stimulated before I actually begin the session. So I need more answers. Please, come on. Some more. Okay. Okay. Yeah, that's really good. So continue. Yeah, investment. Okay. Yeah. Yes. I'm liking the words which are coming out of your mouth. Excellent answer. That's one way to put through. Thank you so much for your answer. Your name, please. Hello. Your name? Yeah. Good answer, Vivek. Yeah. I like. I like where you're heading to. Yeah, that's one way to put through. Anyone else, guys? Come on, come on. I think I'll look for 2 answers and then I'll begin my session. Anyone else, guys? What do you think a mutual fund means? Come on, please. Yeah. Yeah, sure. Okay. Yeah, that's fine. That's fine. But like again, that problem will come before, so it'll. I did request people to join in early, but yeah, I don't think I can do it. Apologies for that, guys. Yeah. Okay, so we'll start with our session. Okay, you guys cool? Can you start? Can you guys still see the screen? Is it like no frame rate drop, right? You guys can still see the screen, right? I need an answer, please. Okay, fine. Let's start. Okay, let's start with mutual funds. Yeah, okay. So as you guys, so I really like the answers which you guys told. I mean, it's very good answers. All of you did tell you, all of you guys did tell really a good overview of what a mutual fund is. So I would like to reiterate that again. So a mutual fund is basically a fund or a company, you could call, or an organization that pools money. So I'm just gonna write the keywords here, and also guys, I would suggest that if you have some form of a note taking habit for this, because the sessions from now are gonna the difficulty is gonna go up a little higher. So to remember those concepts and grasp those concepts, I would like you guys to like at least write down the keywords, if not make detailed notes. So I would really appreciate it, guys. Thank you. Yeah, so mutual funds is basically a company slash fund slash organization, you can call it anything, that pools money. So pooling, you guys have heard of car pooling, right? A lot of people can go in one single car and go to so you guys are aware of car pooling, right? Same concept here. So pooling of money from retail investors, or it doesn't have to be retail specific, so retail investors, and that the firm or the organization invests that money in, this is a very key word, I'm writing it in quotes, financial securities, and I'll come to this later, why I took an umbrella term called financial securities. I'll be coming to that later. Okay, so this like if someone really asks you what a mutual fund is, this is a definition which it's this is the definition they expect, or this is a very concise definition. I mean, not to all your definitions were extremely good, but if you guys want like a more better definition which covers all the grounds, this is what a mutual funds mean. So I'll repeat again, it's a company slash fund slash organization where pooling of money from retail investors happen, and that firm invests that money, or the money invested by those retail investors, in financial securities. Okay, I hope you guys got the grasp of this. Any doubts till now? Anyone, please unmute and tell me. Retail investors, like people like us, just like us, we are investing, so we are giving our money, we want to buy something. So retail investors is it's a very technical term for people like us. You could just call it investors as well, no problem, that's fine. So when you invest in the stock market, you are also a retail investor in the stock market. So that's what it means. Okay, I hope that clarifies it out. Okay, yeah, so let's continue. Okay, so we'll go to the next question. My next question is, why mutual funds? Why? You have seen those Shikhar Dhawan ads, right? In that he'll be like, mutual fund sahi hai. You have Shreyas Iyer also doing mutual fund sahi hai. So you see that ad, right? Mutual fund sahi hai. So why do you think they tell? I mean, they are given a script by the AMCs. I'll come to AMC later. But why do you think mutual funds? what difference that mutual funds make from other financial securities available? Anyone wants to have a go? A one-liner or something? Why do you think mutual funds go? Yeah, that's yeah, excellent. I like the answer. That's one way to put it. Anyone else, guys? Please. I'll reiterate again and again. It's a very verbose topic, so I need interactions from each and every one of you so that the concepts and the fundamentals are reinforced very, properly in your brain. So, anyone else would like to have a go? I want this to be very, very I want this to be more interactive than the previous session. This is just a request. Yeah. Anyone else? So, why mutual funds? Correct. Yeah, that's a good answer. I really like it. That's one way to put through. Sorry. Yeah, please go ahead. As I told before, it doesn't, any answer is welcome. We are there to help you guys. Yeah, go ahead, please. Anything which you think, yeah. Okay. So yeah, I mean, I really appreciate your answer, but I know where you're getting the idea from. But yeah, it can be put in another way. So thank you so much for your answer. So I'll clarify the doubt you have. Thank you so much for your answer. Okay, that's one way to put through. Yeah, no problem. Yeah, that's a good answer. So I really like the answers which come, guys. So I'll explain. This is my version of why I feel mutual funds are there. Okay. So there's something called financial instruments. Okay. So this is a very key term. Financial instrument is basically it's a vehicle. So where you put your money and you expect some sort of return from it. Okay. So those are financial instruments. So financial instruments can include stocks is one financial instrument. Mutual funds is one financial instrument. Certificate of deposit is one financial instrument. Gold is one financial instrument. Anything which gives you some sort of profit or a return, not necessarily you invest in it with the hope of getting some amount of profit or return from it. So that's what a financial instrument is. Okay. So in this financial instrument, so whenever you analyze a financial instrument, it can be equity, it can be gold, it can be fixed income securities. You guys don't have to worry about this. In today's session itself, I'm going to explain what fixed income securities are. Okay. So whenever you want to do investments in these things you call financial instruments, there are four main factors. Okay. So the first one is risk, as a few gentlemen told now. So you have something called risk, you have return, you have volatility, and the fourth one is liquidity. Okay. So we keep hearing about stock markets, sometimes. So depending on what type of stocks you invest in, usually, I'm just averaging out, I'm just taking a cumulative feedback. Usually when you directly invest in the stock markets, your risk and return go hand in hand. Okay. So the more returns you are expecting, the more risk you have to take, and sometimes your returns might not be as fruitful as you expect it to be. Sometimes your returns can be 20%, and if the markets are performing really bad, your returns can be less. Okay, so that's I wouldn't say that's a drawback. And plus, when you want to directly invest in the stock markets, right, you need to have like really good knowledge of the stock market. You need to keep yourself updated. You should know, like, how you trade on charts. You should know a few fundamental tools which will help you screen the stocks. A lot of study is required. So when and this mutual fund. So another point I would like to tell is, sorry I didn't tell it before. These mutual fund houses, okay, so these mutual fund houses are managed by what we call AMC. AMC stands for Asset Management Companies, and these can include, most of the asset managed companies are basically like, the popular ones like State Bank of India. Aditya Birla is one. uh, so Aditya Birla is there. Then you have Axis Bank. So these banks open up these mutual fund houses, and each of these mutual fund houses have like a specific goal, based on because different clients have different risk portfolios. So I'll come to, if any term seems foreign to you, please, bear with me for some time. I'm going to explain I will dissect each and every word for you guys, so you don't have to worry. So these companies can have multiple mutual fund houses based on like a target client. So these are called asset management companies, and these can have different various mutual fund houses. So Axis Bank may have like 3 5, I'm just, 5 may have, they can have 5 to 10. SBI can have 5 to 10. So I want you guys to remember this point. Mutual fund houses are managed by something called asset management companies, and a few example of asset management companies are SBI, Aditya Birla, Axis Bank, ICICI. I mean, you guys would have heard of ICICI Prudential. The ads were very famous. So these are what we call asset management companies. Okay, so coming back to the topic with respect to mutual funds. Okay, so as I explained before, mutual funds mean what? A company, fund, organization where they pool money from retail investors, and this firm invests those investors' money in financial securities. Okay, so as I told before, mutual fund is it's one form of financial vehicle or a financial instrument. Okay, and when you're analyzing a mutual fund, I'll be explaining how we can deal with mutual funds as well in the subsequent session or today's session itself. So when it comes to mutual fund, the risk and return always go hand in hand. So when you want ample returns, you must be willing to take enough risk for it. I mean, it's common knowledge. It's something which common knowledge, but I'd like to reiterate again. Okay, so with respect to mutual funds, I would say the risk is moderate. Okay, and I'll explain as to why the risk is moderate as well. So usually when you average out, I'm not taking a specific mutual fund here. When you take a cumulative mutual fund, the risk is moderate. Okay, that's slightly more. It's not as high as like equity, and the risk is not as low as, say, a fixed deposit. So it's a moderate risk. And returns, again, these are average returns. This is not like at one point or within a year or after a year. The average returns, at least going by the trend of many mutual fund houses, established mutual fund houses in India, they usually range from 13 to 15% of your investment. Okay, and this is again more. For example, a fixed deposit usually gives you like 4 to 5%. So the returns are very less than that. And for if you do equity trading, you do stock market trading on your own, your returns might be like, say, 20%, but at the same time your risk is very high as well. But here it's like an even ground. You have best of both the worlds. So you're not getting very less returns as compared to, say, a financial instrument like fixed deposit, and you're not taking much risk, too much risk as compared to when you're trading on your own. So it combines best of both the worlds. That's what mutual funds do. Okay, so the returns usually average from 13 to 15%. Volatility and liquidity. So can anyone just unmute and tell me, what do you think volatility and liquidity mean? A one liner. Yeah, Excel. Yeah, yes, that's a very Yeah, that's a very good answer. Anyone else, guys? Anyone else? Anyone else? Liquidity. Can anyone explain liquidity as well if you guys have an idea? What is liquid cash? If you guys know what liquid cash is, it's self-explanatory what liquidity is. Anyone wants to have a go? Yes, exactly. That's a good answer. Anyone else, guys? Yeah. Excellent. Yeah, that's a very good answer. Yeah, you just that's a very good answer. Thank you so much. Yeah. So as he explained, volatility is how frequently the market reacts to changing in prices or something. Okay. So we usually tell this particular stock is volatile means it reacts to price changes really fast. But so with respect to mutual funds, the volatility will be high because most of the mutual funds which are available out there still invest in equity. So that is equity is whatever stock markets we deal with. The only difference comes in the fact that we have seasoned professionals called portfolio managers. Portfolio managers, these are actual finance people who tally everything, who study the company in and out, and they invest on your behalf. So you can bank on their knowledge to give you can bank on their knowledge hoping to get some returns from there, but still the market is so regardless of whether you invest or if the portfolio manager or the fund manager invests for you, the stock market's volatility will be the same. I will come to bifurcation of mutual funds. Like not all mutual funds invest only in equity, but like most of the mutual funds available out there. So this is just like an average, and it's like a head count of most of the mutual funds out there have their stake in equity. So the volatility is usually high. So that's, I hope that clears your point. Any doubts till now? Anyone? Any doubts? No, 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 no. The volatility is not high because volatility is basically how a particular financial instrument or a particular product reacts to price changes. Okay, so I'll ask you a question. Do you agree with my point that stock markets are volatile in nature? Can be volatile in nature, have the potential to be volatile in nature. Do you agree with my statement? Okay. Most of the mutual funds houses available, most of them, like if you take a rough head count, most of them in their portfolio, I'll explain. Portfolio is basically a percentage breakdown of how your money is invested in various financial instruments. Okay, most of the mutual funds invest in the stock markets. Okay, so I hope you got till now. Am I with you till now? Okay. So whether a seasoned professional invests in the market or we invest in the market, the volatility won't change, might not change. It'll still be the same, right? The only difference is the professional manager knows when to withdraw the money when the markets are bad, and he knows when to time and exit the market better than we do. Will you accept this point? Yeah. So in general, you can tell that in mutual funds, the volatility is high because as I told before, risk and return, they go hand in hand. So volatility sometimes depends on those factors as well. So essentially, when you invest mutual funds, most of them do invest in equity markets. So obviously the volatility will be high, not because the mutual fund invests. So mutual funds along with retail investors do invest. So volatility is with respect to stock market prices. It's not with respect to whether a mutual fund invests. Stock market is volatile. You'll agree to that point? So obviously, whether I invest myself or a mutual fund invests itself, regardless of who the investor is, the stock market nature is volatile. So it's like transitive rule. When A is to B is to C, then A is to C. So it's something like that. So you have us, you have a mutual fund, you have the mutual fund to invest for us in market. So obviously when we invest ourselves, so that's A to C, the volatility, we think the market is volatile. So even the mutual fund is going to have the same view about the market, right? Yeah, the stock market is volatile in general. So I hope that clarifies your point. Yeah, thank you so much. Yeah. Okay. So guys, I really appreciate this. The more doubts you ask, the better, the concepts are reinforced. I really like it when you make the session interactive. So going on, liquidity. Okay. So this, as someone told before, it's basically how fast your investment or your cash, you could call it anything. Let's use like a very good term. Your investment can be converted to cash. And I mean like cash, like paper cash or in your bank account. So liquidity is a measure of how fast your investment can be converted to cash. And with respect to mutual funds, the liquidity is usually high. You can withdraw money anytime and stuff. I'm going to explain how you withdraw money, what are the taxes levied on them in the subsequent session or in today's session at this time. Usually when you take a head count, the liquidity of a mutual fund is usually high. When you invest in something, you can expect a decent return, and the money will be on your hand. The rate, the money on in your hand is usually high. And I don't mean the returns are high. The how quick your money, how quick your investment converted into cash, that measure is high in your hand. So in mutual funds, you say the liquidity is high, you can withdraw. There's something a lock-in period. So I will explain lock-in period. So in some mutual funds like ELSs, like the lock-in period is 3 years. So until 3 years, you can't sell any of your assets in that mutual fund. Okay, in that particular mutual funds. But if you take most of the mutual funds around there, you can invest. When you invest in a mutual fund, you can sell those assets as well and quickly retrieve the money. So that's why in general we say that the liquidity of a mutual fund is high. I hope everything is clear till now. Any doubts, guys, please, before I move ahead. Please, hello. I need a response. Okay. So it's not so usually banks is the definition of trust, right? So will you agree to my point? So banks are the definition of trust because banks are financial institutions which are revered in India. That's why you see most of the mutual fund houses are operated by banks in India. That's how the trend has been. But it's not necessary only for a bank to be an AMC. As you can see, Aditya Birla is not particularly a bank, but they do have mutual fund houses. Okay, so I hope that clarifies your point. Banks are a symbol of trust in our country, so that's why at least the trend has been most of the banks, which is why most of the banks in India have mutual fund houses. I hope that clarifies it out. Yeah. Yeah, that's so he told, that's also a very good point. Small case is something we'll be covering as well, but in general, if you look at the hedge, like honk or like proper very big established mutual funds, they always operate like usually it is banks who have those AMCs, because in India we associate banks with trust. And when you're investing a money in a fund, you want to make sure that you associate trust with it as well. So when you want to associate trust, it's obviously people will trust something when it's a bank. So that's why at least most of the AMCs in India operate under banks. So I hope that clarifies it out. As the gentleman pointed out before, small case. So small case is like it's another topic. It comes in equity investing. We'll be covering that as well. That's one of the other examples which goes against this. But usually banks, most of the mutual fund houses in India are operated under banks. So the asset management company above them is a bank. I hope that clarifies it out. Hello? Yeah, yeah, sure. Yeah, yeah. Yeah. Yes. No, no, no. Yeah, so, yeah, thank you for the question. So 13 to 15% is keeping in mind a long-term view. So these are annual returns. It's not necessary that 13 to 15% will be your return every year. These are average returns. So, and you usually, when you invest in mutual funds, you keep in mind long-term investment. So say 3 years, 2 years and stuff. So keeping those 2, 3 years in mind, your returns are 13 to 15%. So I hope it's not per month or something. These are annual returns, but usually the returns are. So I'll come to something called, we have something called SIP and lump sum. So there you have averaging out of returns in one case. So when you take the average of whatever returns you get, usually the annual return rate ranges from 13 to 15%. Keeping in mind like a long-term investment plan, like 2 to 3 years. I hope that answers your doubt. Yeah, sure. Before I proceed, any more doubts, guys? Yeah, yeah. Yes, that's. No, no, no. It's so when you, I will be covering that point. I don't. These are just the basics today. So to cover your question, no, you don't need a demat account for a mutual. When you want to invest in mutual funds, you need to open. The steps I will explain later, because if I explain everything now, the basics will be overridden. I will come to your question later, but yeah, to answer your question short, no, it's not necessary. It won't be. It's not a demat account in this. Demat account is only when you are trading on the equity markets on your own. So I hope that clarifies it out. Yeah, for small case, yes, 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 small case, yes, you need to own a demat account. It's basically, it's like a conglomeration of stocks based on your risk profile. So for example, when you can appetite a risk of say 20% and return of 25%. So, I'm really sorry guys, there was a background noise. So when you can, so small case is basically, for example, it's like a case. So in your case, you have different stocks based on your risk appetite. So the more risk you're willing to take, you will have a small case which has the same. So if you take more risk, if you're willing to take more risk, that means that you're ready to invest in say a small cap company. So small cap companies are usually associated with higher risk, higher return. So in small case, you will have like so many stocks which are there in small cap companies. So that is a small case. So again, I don't want to go beyond the topic. Small case is something which is usually associated with direct stock market investing, which we do. But as a gentleman noted before, small case is one example of AMC. I hope that clarifies your doubt. Yeah, yeah, thank you. Sorry for the background noise, guys. I'm really sorry. Okay, and I think a most important feature we want to keep is we want to make sure that the returns beat inflation. So the inflation rate usually ranges from like say 3 to 4%. I'm averaging out. I'm just usually the inflation could be 6%, 5%, but those are like very rare. Usually they average from 3 to 4% is the usual inflation rate in a country. So obviously you want your returns to be higher than your inflation as well. That is when you know that your purchasing power. So there's something called purchasing power is higher. So when your returns are 13 to 14%, as I told before in this mutual fund, obviously it beats this inflation. So that is one of the benefits of investing in mutual funds, guys. Okay. So let's, yeah, hi. Yes, so as I told before, it's 6% is very rare. I mean, the inflation is currently high now. This is the average inflation rate of countries you could take. You could take 6% as well. Even if I did take 6%, you're beating inflation with these returns. Yeah, yeah. That's fine. No problem, guys. No problem. Okay, so let's come to the features, shall we? So as I told before, these mutual fund houses, are managed by AMCs. So you do have private AMCs, as the gentleman noted before, and you do have AMCs which are under well-established banks like SBI, uh, uh, SBI, ICICI, Axis Bank, and you do have like other retail companies like Aditya Birla which have mutual funds under their name as well. Okay, so that's one step. So the next topic we'll be covering is types of mutual funds. Okay. And this is a lot, based on your based on the investors goals. The types of mutual funds are like a lot. You have a lot of, the bifurcations can be many, but I'm going to stick with, like, the basic type of bifurcation we know. So before I continue, do you guys can you guys just let me know what do you think are the type of mutual funds in India, available in India? Anyone? Yeah, that's one. Anyone? Anything else? Yes, that's one type. Anything else, guys? Excellent. Debt is one. Yes, that's excellent. Anyone? Anything else? Hybrid. Yeah. So that is like the basic bifurcation of mutual funds in here. You do have other funds like sector funds, index funds, growth funds. Growth funds and equity funds are kind of similar, although there are minor differences. But let's stick with the usual bifurcation. As you know, as these gentlemen pointed out before, mutual funds are usually divided into three types. So one is called equity mutual funds. Okay. So these equity mutual funds, as it's, as this word equity says, these mutual funds invest in the equity markets for you. That is stock market for you guys. Okay. So this is what they'll do. The only difference is, like, they'll know what their respective client's risk appetite is, and they invest accordingly. If his risk appetite is less, they're going to invest in blue chip stocks because they'll give some amount of return with less risk. Say the risk appetite is more, they are going to invest in small cap mutual funds. I'm going to come to that as well. So this is what, so in general, equity mutual funds, they invest in stocks. Sorry guys, they invest in stock. The other thing is called debt mutual funds. Okay. So these mutual funds invest in fixed income securities. I will be taking fixed income securities in detail in the future. So these are basically anything like, which it's something, so corporate bonds. So these are issued by the government. So one fixed income security is corporate bonds. The other can be debentures. I mean, please don't get thrown off by these birds, guys. I'll be explaining them. Government securities, it's a fixed income security. So these debt mutual funds, what they do is they give you some sort of they give you a fixed return. I mean, not in all cases. Like in case if the government is taking more loans and stuff, the interest has to be levied. Right? In general, they are called fixed income securities because they give some sort of guaranteed return. But as you guys know, a guaranteed return, sometimes, when you get a guaranteed return, the risk is low. So usually the people who invest in debt mutual funds are those whose risk appetite is very less. So again, this is one type of mutual funds. They invest in something called fixed income securities. So fixed income securities can be anything. So it can be corporate bonds, it can be debentures, it can be government securities. I'll be going through them in detail in the subsequent sessions. I don't want you guys to get like too muddled up in a lot of information. Let's take it slow. And obviously the third will be is like self-explanatory. So you have hybrid mutual funds. So this is like somewhere in between equity mutual funds and debt mutual funds. So it combines the best of both the worlds. So some of your money is invested in equity and some of your money is invested in debt mutual funds. So it's like the best of both the worlds. Okay. So this is like a basic bifurcation, a very common overview bifurcation of mutual fund houses in India. Okay. And I could further classify equity mutual funds. So I hope there are no more doubts. So did you guys understand the three types of basic mutual funds available in India? Any doubts till now, guys? Yes, there are a lot of, there are difference in returns. So when I will be dealing with them, I'll come to that. But yes, there are a lot of, for example, as I told, debt mutual funds is usually, people who invest in debt mutual funds are usually people who don't want to take more risk. Okay, fixed income securities, so they guarantee some form of return. Okay, and when you want return for sure, the risk you have to appetite is less. So obviously your risk percentage is also reduced. Am I right? Any discrepancy till now? Hello? Yeah, so in equity mutual funds, obviously when you're investing in the stock market, and since it's a very volatile place, you're when you're investing in an equity mutual funds, it means that you're able to appetite more risk, you're willing to take more risk, and when you're willing to take more risk, your prospective returns might be more. So yeah, the risk and return, the risk to reward ratios do differ in these three types of mutual funds. I will be coming to them when I'll be explaining each topic in detail. Okay, I hope that clarifies it out. Yeah. So these equity mutual funds, they are again of three types. There are different types based on the client's goals, but usually they are of three types. So you have something called large cap mutual funds. The other is mid cap, and you have small cap. So if you go on Nifty's website, SEBI, so the Securities and Exchange Board of India, SEBI classifies large cap mutual funds or large cap companies. 1 to 100 companies which are listed on the exchange are usually large cap mutual funds. Large cap companies. So these large cap companies are present in large cap mutual funds. Okay. So if you go on Nifty's website, so you have a lot of mutual funds which say Axis Bank Nifty 100. That means the Axis Bank has a mutual fund which invests in Nifty 100. Nifty 100 means top 100 companies which are listed on the National Stock Exchange. So top 100 companies are usually blue chip companies, companies with good fundamentals, good historical performance. So SEBI, to make sure the bifurcation is very clear, SEBI has listed that the companies 1 to 100 listed on the exchange are large cap companies, and these mutual funds deal with these companies only. And then you have mid cap companies, where SEBI defines that 100, 101 to 250th in the exchange companies are called mid cap companies, and these companies are there. These companies are dealt by what we call mid cap mutual funds, and small cap mutual funds 250 onwards, so 250 plus onwards. So any company in the stock exchange which comes after the 250th position, these companies are dealt by something what we call small cap mutual fund companies. Any doubts till now, guys? So these can include, so I'll just give examples to reinforce. So these can include Reliance and stuff, Reliance, Infosys, these stocks which are traded regularly. Mid cap can be, say, Biocon, and you have other companies as well which are mid cap. These are not as big as Reliance or Infosys, but they have decent returns. So usually with respect to risk, if you want to talk with respect to risk and returns, the returns in large cap are usually if since the risk associated with large cap companies is low, you expect your returns to be comparatively low as well. I am telling I know the word comparatively, so I'm talking with respect to mid cap and small cap. Okay, and mid cap is somewhere in between, so it's moderate risk, moderate return. Small cap mutual funds is high risk, high reward, since you're investing in companies which are upcoming, so you're willing to take a higher risk on them, you're betting on them. So usually it's higher, with higher risk, if everything goes well, you're getting a higher reward as well. So I hope that I hope that's understandable. Any doubts till now, guys? Hello? Any doubts, guys? Yeah. I want everyone to open up, please. Any doubts, guys? Yeah, okay, sure. Thank you. Because again, I would like to tell it would be good if you guys can unmute, because I can't if I go to the chat box, my display also changes, so there won't be a very good flow. Okay, so this is like a very broad bifurcation of equity mutual funds in India. And then you have something called sector. There's another classification called sector based. Okay, so in these sector based funds, the objective of these type of mutual funds is, again, these are targeted to particular clients, like, particular clients, the kind of portfolio they want. This is geared towards leveraging a particular sector which is doing very well in India. So that's what these sector based mutual funds do. So there are some mutual funds which specifically invest in technology. There are some which specifically invest in banking. So the stocks will only be banking, like, Allahabad Bank, State Bank of India and stuff. So technology based mutual funds have companies like Infosys and Reliance and stuff. There are some mutual funds which only invest in agriculture stocks listed. Auto FMCG is one very good example. So Britannia is one example, and automobiles, various, yeah, that's also MSMEs. MSME is also one example. So these are called sector based mutual funds, where they specifically they leverage the growth in a particular industry and they invest only in those particular stocks. So very common sector based mutual funds in India, they invest in tech, banking, agriculture, automobile, FMCG, MSMEs as well. So this is another form of bifurcation. Okay, and there is another form of mutual funds. Okay, so these I'll be covering these later, but I would just like to tell. So these are called tax saving mutual funds. Can anyone tell me a term which is what an example of tax saving mutual funds? Anyone has an idea? Because mutual funds, the tax is levied on them. So I will be coming to what are the taxes levied based on when you sell your mutual fund assets. But there is a particular type of mutual fund where you can save your taxes. You can deduct your taxes. Does anyone have an idea what they are? I'm not particularly talking about life insurance here. I mean, that is correct. I'm talking with respect to mutual funds, not life insurance. So it's fine, no problem. Thank you for your answer. So we have something in India called ELSS. Okay. So these are nothing but equity linked savings. Yeah. These are called equity linked savings scheme. Okay. Equity linked saving scheme. Sorry guys. So I mean, I don't know whether it's common knowledge, but usually when you're investing in mutual funds and you get a return on it, a portion of your return has to be in the form of taxes. So again, though, that portion of return is based on whether you withdraw your money within 1 year or after 1 year. So I will be coming to taxes levied on mutual fund returns subsequently. I want to take it very slow because it's a very verbose topic. But there are something called ELSS which is offered in India. So it's called equity linked saving scheme. Okay. So in these taxes are levied, but under the Constitution of India, Section 80C. So in that you have tax redemptions on investments. You can redeem whatever taxes you have to pay on ELSS under this act. So Constitution of, you don't have to remember this information. I want to just tell you guys, like, how is it particularly that equity linked saving scheme can exempt taxes. So there is there's an income tax act in the Constitution which is called Section 80C. In that there's a section, in that there's a particular section where you can your taxes are exempted from investment. So obviously mutual fund is one form of investment, right? So taxes are exempted. Any doubts still here, guys? So these are this is a very common bifurcation of mutual funds. There are a lot of based, because everyone's goals are different. Someone wants to invest in short term, so they invest in they have a specific mutual fund for them. You have something called index funds, you have something called dividend funds and stuff. Those are they go too into detail. This is like a basic, this is the basic bifurcation of mutual funds in India. So I would like to recap mutual funds, the basic bifurcation: equity mutual funds, debt mutual funds, hybrid mutual funds. So equity is like, these mutual funds invest in the equity or the stock market. Debt mutual funds invest in what we call fixed income securities, so they can include corporate bonds, debentures, government securities. Hybrid mutual funds is best of both the worlds. So debt mutual funds, usually they have low risk, so your returns are more or less guaranteed. Equity mutual funds kind of it operates similar to how, suppose we trade in the stock market, it operates somewhere similarly. So when you invest in equity mutual funds, your risk appetite is high, so your potential returns are also high. Hybrid is best of both the worlds. So someone who doesn't want to take too much risk as well, but he wants decent returns, they invest these mutual funds, make sure that in their portfolio. So portfolio is like the division, whatever money you invest, right? So that division is split, that so how much percentage of your investment goes into equity or debt or gold. So these hybrid mutual funds combine the best of everything. So this is like a basic overview of mutual funds. And further, these equity mutual funds, they are divided into three things: so large cap, mid cap, small cap. So according to SEBI, if you go on national exchange, 1 to 100 companies listed on the exchange are what we call large cap companies, and these mutual funds deal with these companies as well. Large cap companies are also called blue chip companies. So blue chip is because they have good fundamentals, traditional historic performance has been very high, reputation is there. So that's why these are called large cap companies. Mid cap companies, according to SEBI, 101 to 250th companies listed in the stock exchange, they are called mid cap companies, and these mutual funds specifically deal with these companies. And small cap companies are basically 250th from 250 onwards on the stock exchange, and there are mutual funds which deal with these companies specifically. And then you have something called sector funds. So these leverage the booming of a particular sector and invest their investors' money in a particular sector. So you have mutual funds which deal with technology, banking, MSMEs, agriculture, automobile, FMCG. These are just a few examples. There are other sector-based mutual funds as well. And the other form of mutual fund, we have something called tax-saving mutual fund. So like, there is something called ELSS which is offered in India. So it's equity-linked savings scheme, and the taxes can be exempted under Constitution of India, section 80C. So if you go under that, there's an act where you can exempt taxes on your investment. So this is another form of mutual funds which are available in India. Any doubts till here, guys? Any other doubts? I know this material is like very verbose. I know it's too much to take in. This will be the last topic I'll be taking for today. So if you guys have any doubts till now, you can please ask. I will be explaining. Fixed income instruments is something I'll be explaining, because debentures and corporate bonds are something I need a lot of time for, because these are government securities. So I will need some time for that. They operate in something called the money market. So you have stock market and then you have money markets, right? So that's an entirely different layer. For now, you can just think of it as government securities, okay? Corporate bonds, debentures and all, these are government securities. I will be explaining, because I have an idea about all these. I will be explaining in the subsequent sessions. I hope that clarifies your doubts. Think of them as fixed incomes. These are government securities. So for example, are you aware of fixed deposit? Think of it as something like an higher version of, I'm not talking with respect to debentures only. These fixed income securities, think of it as something like a fixed deposit, but with a slightly higher returns. Like, you do get your returns, but the returns are usually less in comparison to equity mutual funds. So when your returns are less, so usually when you have less risk appetite, so when you want to take less risk, obviously you have to be ready to accept comparatively less returns with respect to equity mutual fund as well. So those type of people invest in what is called debt mutual funds. I hope that clarifies it out. Don't worry about it. I will be explaining corporate bonds, debentures and government securities. The sessions will be coming up fast. Before you can blink an eyelid, all these sessions will be taught. I hope that clarifies it out. There are people still joining in now. Wow. Yeah. Any more doubts, guys? So this will be the last topic. I mean, I don't want to. This itself will be a lot to take in. So this will be the last. This is the. I mean, the session is over now. Any more doubts? If you guys have doubts, you could stay back. If you like, I will be in the call for 10 more minutes. If you guys have doubts, you could stay, or yeah, if you want, you could leave the meet as well. So, any feedback about today's session? Anyone who wants to leave any feedback about today's session? Yeah, yeah, and yeah. Sorry.